All right, so cryptocurrency has really caught your attention, and we've got you covered. We've got this super interesting article called Simply Cryptocurrency, and it's going to give us, hopefully give you a really solid understanding of this whole world. We're not just going to define it. We're going to really dive into how it works, the tech behind it, what you can use it for, and of course, the pros and cons, all that good stuff.
Yeah, cryptocurrency is definitely a hot topic right now.
Yeah.
I think what's really fascinating about it is it really does represent a potential shift in how we think about money and transactions.
For sure, absolutely. So, okay, let's unpack this. What is cryptocurrency?
Well, at its most basic level, it's digital money, right? But what sets it apart is that it's decentralized. So there's no single authority like a bank or a government that controls it. It's all built on this really incredible technology called blockchain.
Blockchain, yeah. That's one of those words that everyone kind of throws around, but I feel like a lot of people don't really understand it.
It can be tough to wrap your head around. But imagine it like a digital checkbook. And that checkbook is shared across tons of computers, right? So every transaction is recorded on this checkbook, and everyone on the network has an identical copy. This makes it super, super secure and transparent.
Oh, wow. So it's virtually tamper-proof because everyone has the same record.
Exactly. And to add to this whole world, there are actually over 9,000 different cryptocurrencies out there. Bitcoin, Ethereum, those are kind of the household names. But the ecosystem is huge and diverse.
9,000. Wow. Okay. That's a lot to keep track of. I remember even trying to buy my first Bitcoin, and I was just like, oh my God, there's so many choices.
It can be overwhelming. And especially when you consider that it's not just for investing, right?
Yeah.
You can actually use some cryptocurrencies to buy goods and services, although it's still, pretty early stages for that.
So I'm not going to be paying for my coffee with Bitcoin anytime soon, but it's a possibility.
It's becoming more and more common, yeah. But I think the real draw for a lot of people is the investment potential. But here's the key takeaway. You have to do your research. This is not something you just jump into blindly. It's a complex world, and there are real risks involved.
Right. It's not just pick a coin with a fun name and hope for the best. I remember reading stories about, about people who lost a ton of money, chasing those guaranteed returns in the early days.
Yeah, those stories are a good reminder that there's no substitute for due diligence. You got to understand what you're getting into. And a big part of that is learning how transactions are verified and added to the blockchain.
Oh, right. Proof of work versus proof of stake. Those are the two biggies,
Yeah.
right? And you hear this all the time. What's the difference?
It's a debate that's really shaping the future of cryptocurrency.
Oh, wow.
They have very different approaches. Let's start with proof of work. This is where the whole concept of mining comes in.
Mining! That always sounded so mysterious to me. It's like this digital gold rush.
It kind of is. You can imagine this global competition. Powerful computers are racing to solve incredibly complex mathematical problems. These computers are called miners. And essentially what they're doing is they're competing to verify transactions and add them to the blockchain. The first one to crack the code, so to speak, gets rewarded with cryptocurrency.
So it's kind of like a digital treasure hunt, but with real-world rewards.
Yeah, that's a good way to put it. And those rewards can be substantial. In the Bitcoin network, for example, the miner who successfully validates a block currently receives 6.25 Bitcoin.
Okay, hold on. Let me do the math. That's like winning a lottery ticket worth around $200,000.
Yeah, pretty much.
Yeah.
But there's a catch. This kind of mining requires a ton of computing power. It consumes a huge amount of electricity. It's gotten so competitive and resource intensive that for the average person, it's often not profitable.
Right. Yeah. I've heard a lot about the environmental impact of Bitcoin mining, especially.
It's a valid concern. I mean, Bitcoin mining consumes as much electricity as entire countries, like Norway.
Yeah.
So that energy consumption is a major drawback of proof of work. And that's why a lot of newer cryptocurrencies are opting for a more sustainable alternative, proof of stake.
Oh, okay. So proof of stake is trying to solve that energy problem, but how does it work? It sounds less like a competition and more like, I don't know, collaboration.
Yeah, it is. Instead of solving these crazy math problems, participants in a proof of stake system essentially stake their cryptocurrency as collateral. It's like they're putting down a deposit to show that they're serious about validating transactions.
Interesting. So the more cryptocurrency you stake, the more likely you are to be chosen to verify transactions.
Generally, yes. And because you're not solving these complex problems, it's much more energy efficient.
Hmm.
And it can process transactions way faster.
Like Bitcoin transactions can take around 10 minutes, right?
Right?
But Solana, which uses proof of stake, can handle something like 3,000 transactions per second. That's insane. That kind of speed, I mean, that's crucial for things like, decentralized finance, where you need things to happen quickly.
Exactly. But it's important to remember that both proof of work and proof of stake rely on the same core principle, consensus.
Consensus, what does that mean in the world of cryptocurrency?
It means that for any transaction to be valid, a majority of the participants in the network have to agree that it's legitimate. So whether it's miners solving problems or stakers putting up collateral, the decision ultimately rests on the collective agreement of the network.
Oh, that makes sense. It's like a decentralized system of checks and balances.
Precisely. And that distributed consensus is what gives blockchain technology its incredible security and resilience.
Okay, so we've covered like what cryptocurrency is, the whole idea of blockchain, these two different verification methods, but what about mining? Can like a normal person actually do that?
Well, technically anyone can mine cryptocurrency. But with proof of work, it's become incredibly difficult for individuals to compete. The equipment is expensive, the energy costs are really high, and the competition from large-scale mining operations is fierce.
So unless I have like a basement full of computers and like my own power plant, it's probably not a realistic way to earn crypto.
Yeah, that's probably a fair assessment, especially with proof of work systems. And then there's the environmental impacts, like we talked about earlier. Proof of stake is generally considered to be a more accessible option for individuals, although you do need to own some cryptocurrency beforehand to participate.
Okay, so if someone's like, interested in getting involved, maybe proof of stake is a good starting point. But what about using cryptocurrency like to buy things? Can I actually do that?
You can. More and more businesses are starting to accept cryptocurrencies like Litecoin, Bitcoin, and Ethereum. But it's still, adoption is still evolving, so it's important to check with individual businesses.
So it's not mainstream yet, but maybe someday we'll be paying for our coffee with Bitcoin.
It's a possibility, for sure. But as we've discussed, a lot of people see cryptocurrency as an alternative investment. It's often viewed as a way to, diversify a portfolio beyond traditional stocks and bonds.
Right. I've even heard Bitcoin referred to as like digital gold. Is that a fair comparison?
Yeah, that's a popular analogy.
Yeah.
Because Bitcoin has a limited supply and is seen as a relatively secure and decentralized asset, some investors view it as a potential store of value, similar to precious metals like gold. However, unlike gold, it's easily divisible and transferable, making it potentially more useful in a digital economy.
Okay, so it's not just about, it's a lot to consider. Okay, let's say I'm ready to dive in. What do I need to know about actually buying and storing cryptocurrency securely?
That's where cryptocurrency wallets come in. They're basically digital tools that let you send, receive, and store your crypto. Think of it like your personal vault for managing your digital assets.
Okay, so a wallet's essential. I've heard horror stories about people losing access to their crypto because they didn't have a secure wallet.
Yeah, security is paramount in the crypto world. One common type of wallet is a hot wallet. These are software-based and connected to the internet, so they're convenient for, frequent transactions and managing multiple cryptocurrencies.
So hot wallet's like the digital equivalent of the wallet I carry around for everyday purchases.
Exactly. But just like you wouldn't carry your life savings in your pocket, you shouldn't store large amounts of crypto in a hot wallet. There are security risks.
Right, because they're always online, so they're more vulnerable to hacking, malware, that kind of thing.
Right.
So what's the alternative if I want like maximum security for my crypto?
If you're holding a significant amount of crypto or are particularly concerned about security, a cold wallet might be a better option. These are hardware devices that store your crypto offline, completely isolated from the internet.
So like a physical safe for my digital assets.
Exactly. Cold wallets are considered the most secure way to store crypto because they're not susceptible to online threats.
But I'm guessing they're not as convenient for, if I want to use my crypto for everyday transactions.
You're right. There's always a trade-off between security and accessibility.
Yeah, makes sense, whether we're talking about like our real wallets or our digital ones. Before we get too deep into all the practical stuff, I wanted to kind of circle back to something you mentioned earlier about the human element of crypto. What did you mean by that?
It's easy to get caught up in the technical details. But at the end of the day, cryptocurrency is driven by people. Developers, investors, entrepreneurs, everyday users, they're all shaping the space.
Yeah.
And those human interactions, they bring with them a whole set of social and economic implications that are worth thinking about.
Yeah, for sure. We often talk about technology as if it exists in a vacuum, but it never does. It's always intertwined with human behavior and societal impact.
Exactly. For example, cryptocurrency has the potential to empower individuals and communities, particularly in regions with limited access to traditional financial services.
Yeah. I was reading about how, cryptocurrency can be a more accessible and affordable way to send and receive money across borders, especially for migrant workers who often face those really high remittance fees. It's pretty amazing to think that this technology could actually level the playing field in that way.
It's a powerful example of how cryptocurrency can challenge existing systems and create more equitable opportunities. But like any powerful tool, it can also be misused.
Right. I mean, that's true with any new technology, right? It's all about how we choose to use it.
Right.
Are there specific concerns about the potential downsides of cryptocurrency?
Well, because it's decentralized and pseudonymous, there are concerns about its potential for illicit activities, things like money laundering and tax evasion. It's a complex issue, and regulators around the world are trying to figure out how to address it.
Yeah, it's always a challenge with new technologies, right? Finding that balance between fostering innovation and preventing abuse.
Exactly. But finding that balance is crucial for ensuring that cryptocurrency can reach its full potential while minimizing the risks.
For sure. So we've talked about cryptocurrency as an investment, as a potential tool for financial inclusion, and as a technology that raises some really important regulatory questions. It's amazing how this one concept has so many different facets.
It does, and it's still a relatively young and evolving space. We're constantly learning new things about cryptocurrency and its potential impact on society.
So, speaking of learning and evolving, I wanted to shift gears a little bit and talk about the relationship between cryptocurrency and blockchain. I mean, we've talked about blockchain as the underlying technology for cryptocurrency, but are they always the same thing?
That's a key distinction. While blockchain does provide the foundation for most cryptocurrencies, it's important to remember that blockchain technology has applications far beyond just digital currencies. Think of it like an engine, and cryptocurrency is just one of the vehicles it can power.
Oh, okay. So blockchain is the broader technology with a
Yeah.
wide range of potential uses, and cryptocurrency is one specific application of that technology.
Exactly. Blockchain's decentralized and secure nature makes it incredibly versatile.
Yeah.
We're already seeing it being used in supply chain management, voting systems, even healthcare.
Wow, it's like we're seeing a blockchainization of all these different industries. What else is on the horizon?
As blockchain technology continues to develop, we can expect to see even more innovative applications emerge, potentially revolutionizing how we interact with data, manage assets, and build trust. It's a really exciting time to be following this space.
Yeah, it sounds like we're just scratching the surface of what blockchain can do.
We are, and that's what makes it so dynamic and intriguing. There's a constant sense of discovery and innovation.
It reminds me of the early days of the internet, when people were just starting to grasp its potential to connect the world and change everything. There was that same sense of possibility and excitement.
It's a great comparison. And just like the internet, blockchain has the potential to disrupt industries, empower individuals, and reshape how we think about trust and collaboration.
It's a lot to take in, but it's definitely inspiring to think about the positive impact this technology could have.
It is. But it's also important to be realistic about the challenges. As with any disruptive technology, there will be bumps along the road.
That's true. So as we wrap up this part of our deep dive, what key takeaways would you want our listeners to remember?
I'd say approach it with an open mind, a healthy dose of skepticism, and a commitment to continuous learning. The world of cryptocurrency is constantly changing. What's true today might be outdated tomorrow.
That's great advice. It's all about, embracing the journey and being willing to adapt. But speaking of practicalities, let's zoom in on an area that I think trips a lot of people up. Cryptocurrency wallets.
Yeah, they're essential. If you're going to buy, sell, or hold any cryptocurrency, you need a wallet. It's where you really take ownership and control of your digital assets.
So it's not enough to just buy crypto on an exchange. I need a separate wallet to actually store it securely.
That's right. Exchanges are great for trading, but they're not designed for long-term storage. It's kind of like imagine leaving your cash just sitting out in the open in a busy marketplace.
Mm.
Convenient for quick transactions, maybe, but not the safest place long term.
Oh, okay. So a cryptocurrency wallet is more like my personal vault, where I have full control over my assets.
Exactly. It gives you the keys, literally and figuratively, to manage your crypto.
Yeah.
We talked about hot wallets earlier. Those are the software-based ones that are connected to the internet.
Right. Those are like the digital version of my everyday wallet. Convenient, but maybe not the most secure.
Exactly. And if you're holding a larger amount of cryptocurrency or are particularly security conscious, a cold wallet might be a better choice.
Right. Those are the hardware devices that store your crypto offline, totally separate from the internet.
Right. Think of it like a physical safe for your digital assets. Cold wallets are considered the most secure way to store cryptocurrency because they're not susceptible to online threats.
Okay, so hot wallets are good for everyday transactions. Cold wallets are more for like long-term secure storage. Is there like a simple rule of thumb for choosing the right type of wallet?
It depends on your individual needs and your risk tolerance. If you're just starting out and dealing with small amounts of crypto, a hot wallet might be fine. But if you're holding a substantial amount or plan to hold long term, a cold wallet offers that extra peace of mind.
Got it. It's all about finding that balance between convenience and security, like we were talking about before. Okay, so let's say I've got my wallet. I'm ready to jump into the world of cryptocurrency. What are some of the most important things to keep in mind?
Well, as we've discussed, the crypto market is volatile. Prices can go up and down dramatically, and there's always the risk of losing money. Yeah. So it's crucial to have a long-term perspective and be prepared for the ride.
Right. It's definitely not a get rich quick scheme.
Ah.
I remember when Bitcoin first hit the news and everyone was talking about, overnight millionaires, but those stories kind of overshadow the fact that there's real risk involved.
Absolutely. And just like with any investment, do your research. Understand the technology.
Yeah.
Learn about the specific cryptocurrencies you're interested in. And be aware of the risks. Don't be afraid to ask questions. Explore different perspectives. Learn from other people's experiences.
And be wary of scams, right? Phishing attempts, that kind of thing. I remember back in the early days of the internet, it felt like everyone was getting a virus or falling for some online scheme. It's important to be cautious in the crypto space too.
You're absolutely right. Never share your private keys with anyone. And always be wary of suspicious emails or links. It's all about using common sense and being aware of the potential risks. If something sounds too good to be true, it probably is.
That's great advice. It seems like there's a lot to learn, but it's also just a really exciting space to be a part of.
It is, and we're still so early.
Yeah.
It's fascinating to think about how this technology might evolve and the impact it could have.
It really is. Well, it's been amazing exploring the world of cryptocurrency with you today. For our listeners, what final words of wisdom would you leave them with?
Stay curious, be cautious, and most importantly, enjoy the ride. The world of cryptocurrency is full of possibilities and challenges. It's a constant learning experience. Embrace the journey. You never know what you might discover.
Well said. We hope this deep dive has given you the knowledge and insights you need to navigate the exciting and ever-evolving world of cryptocurrency. Stay curious, be informed, and who knows, maybe we'll all be sipping our coffee with Bitcoin someday soon.